Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. An insurance brokerage and an investment management firm top this week's list of growth and income stock picks. And Todd Bunton, our growth and income stock strategist, is here with us once again to fill us in on why these picks made his list. Arthur J. Gallagher & Company is that insurance broker, AJG, the ticker symbol for this stock. Where's the growth? Where's the income here?
Yeah, it's an interesting story here. So they're an insurance brokerage, meaning they don't actually underwrite the policy, so they don't have underwriting risk. Right. And the problem with a lot of insurance companies is their investment portfolio. How are they going to invest that in a low interest rate environment? None of that risk here. So they're just a brokerage firm in that regard. That's about 53% of the revenue comes from that. So they get commissions off of that, and risk management services about 40%. So they provide that for their clients. So it's a lot of fee-based and commission-type business, and they've been doing very well. The company actually just came off a very strong fourth quarter where they beat on both sales and EPS, and that came from strong organic growth within the business. Now, they're mostly within the U.S., but they do have some international operations. So, but they've been fueling organic growth here, and that's probably tied a little bit to an improving economy for sure, probably taking some market share as well. So
higher insurance premiums.
You know it, of course, yeah. So analysts raised their estimates significantly higher after the quarter. So that sent it to a Zacks #1 rank buy, it's a strong buy stock. And analysts expect strong growth to continue. Strong organic growth leading to margin expansion should drive strong double-digit earnings per share growth over the next couple of years. Based on consensus estimates, they're looking at about 35% earnings per share growth this year, 16% growth next year. So you have a very solid growth story here, very solid income story as well. They pay a dividend that yields 3.9%, and they've steadily increased that over the last decade, about 9% compound annual rate going back to 2000. So very good double-digit growth, very solid dividend, and a reasonable price. They trade about 19 times forward earnings. Historically, they traded about 16 times, so it is a small premium to that, but certainly not unreasonable given their strong growth going forward. So there is a lot to like here.
And that investment management firm is Invesco Ltd, IVZ, the ticker symbol. This company's been around forever.
Yeah.
In one
for
way
quite
or
a while.
another.
Yeah, for sure. They have $625 billion in assets under management, so they're definitely a huge player in this market. Headquartered in Atlanta, Georgia, and I think this company has a lot going for it. So do analysts. As the equity market continues to improve, retail investors are starting to shift back into equity products. At least, slowly dipping their toe back into the market after they got burnt in '08. And really, a driver behind that is the low interest rate environment. So cash, bonds, investors are getting paltry returns there. So they're looking to get some kind of reward. And with the economy slowly improving, markets moving higher, investors are starting to shift back into that. And this company directly benefits from that. And higher assets under management, and then a rising stock market means more assets under management too. So it's sort of a win-win there. Company just came off a very solid fourth quarter themselves, beat on earnings per share that prompted analysts to raise their estimates. As you can see here, consensus estimates have been rising for both 2012 and 2013. Based on consensus estimates, analysts are looking for 9% earnings per share growth this year, 18% growth next year. So you got a good growth story, a good income story as well. They pay a dividend that yields about 2%. They steadily increased that over the last few years. So you're getting growth, you're getting income, and you're getting it at a very good price. They trade at just 13 times forward earnings. Historically, they trade about 15 times. So it's a significant discount to that. So as long as the equity market's continuing to improve, Europe doesn't implode, and China doesn't have some hard landing crash that brings down the global markets, then you'll see this, maybe that PE multiple start to expand as retail investors continue to move back into the market.
Do you own either one?
I do not.
All right, check out more Zacks Rank Buy stock pick ideas. They're on our homepage at Zacks.com. If you're not there already watching this video, get over there. 4 new ideas up there for you daily, one in each of the investing categories that we write about on the website. With Todd, I'm Terry Ruffalo.